The JSE All Share index is slightly lower, extending last week's sharp losses as traders weighed heightened risks of the global economic outlook, including the prospect of further rate hikes by central banks and political instability in Russia. Market sentiment also remained affected by persistent concerns surrounding China's economy. Resource-linked sectors and financials were among the worst performers. Portfolio manager at Rand Swiss, Viv Govender, joins us now for the latest market moves. So, Viv, the Rand is slightly stronger today as investors watch for the potential ripple effects of the aborted weekend mutiny in Russia. Talk us through the latest market moves.
Yes, I mean, it was one of the craziest weekends, I think, in recent memory, and this has been quite a high bar to beat, you know what I mean? But we had effectively an ex-convict almost get his hands on the largest nuclear arsenal in the world. It's an incredibly dangerous time in Russia at the moment. We still don't know exactly what happened. Apparently, the leader of Belarus negotiated some kind of deal between between Putin and Prigozhin, I think his name is, and that seems to have calmed things down for the moment. But remember, there's still an ongoing counteroffensive by the Ukrainians on the go. There's still the discussion of, there's nuclear weapons being moved to Belarus, for the fact that's happened. There's possibility of, fighter jets getting into Ukraine from the US, etc. So, yeah, it's a really scary situation. And the market right now, I think, is looking at that, as well as looking at the fact that we are seeing some real signs that the global economy is not as strong as we had thought. And the fact that we've just risen quite strongly over the last few weeks to think that maybe this might be a time to take some money off the table.
This week, heads of major central banks will gather in Portugal, with investors expecting them to signal a commitment to tackle inflation with aggressive rate hikes. Talk us through what options they have in the current environment.
Yeah, look, I mean, rate hikes have already come through. We've seen, everywhere in the world hike rates, including us. The one exception is China, which is just cutting at the moment. Inflation is coming down. Very good news, not just internationally, but locally as well. We're still above our upper band. We're at 6.3 or so, but we're coming below 6 is at the upper level. The US is down to about 4. Europe is also well below, the recent highs that they've seen. The one economy that's not doing as well as others is, the UK. But look, I mean, central banks have to do this. The way central banks work to cut inflation is by clicking to slow down the economy. You slow down the economy, you slow down demand. People demand less, wage increases, less price increases, and that causes inflation to go away. And for all that to work, you can't just use force. You've got to use, a commitment to force as well, commitment to raising interest rates, to set expectations. And so, yeah, there's nothing much you can do as a central bank besides say these kind of things if inflation is above your target band.
Should it not also address country-specific issues? You take a look at a country like South Africa, for instance, you speak of slowing down economies. How much slower can ours really move? It's at a snail's pace already.
Yeah, the problem with this is that, yes, we are a slow economy, etc. But, I mean, the example I put for you is Turkey. Look at Turkey. Turkey is an economy that is larger than South Africa. There's more people there and wealthier per person than South Africa. Look what happens when you try and buck, common economic wisdom about raising interest rates when inflation is high. Their currency has gone from about 3 to 20 in 6 years. It's like for us going from 18 right now to 60 by 2030, less than 2030. Can you imagine that kind of movement? Inflation there was hitting, well above 50% at some point in time. That's 50, not 50% inflation. Why? Because they're not not raising interest rates, but the market wants them to raise interest rates. And so, yes, does sound like we're in a bad situation right now. But you compare us to some, places like Ghana, Sri Lanka, like I said, Turkey, a number of countries around the world, not the poorest countries in the world, some of them very well developed, some of them in certain cases wealthier than us per person. And you'll see that, if we don't follow the path that the Reserve Bank is doing right now, the negative consequences for the economy, for the currency, for inflation can be quite dire.
Okay. Gold prices edged higher on a weaker dollar through bullion hovered close to 3-month lows. What's driving sentiment there?
Yeah, look, I mean, the gold price has really, come down recently. We were well above, slightly above 2,000 per ounce. Now we're close to 1,900. A couple of things. The weakness in China. There's two kinds of things driving gold. One's the fear trade and one's the love trade. The fear trades are inflation. Inflation's, to a certain extent coming down quite significantly. The market, obviously likes that. Gold as a hedge against inflation is not as great when, high interest rates are around, because you can get a return on your money in the bank, but you can't get that from gold. And the love trade is where places like China and India import a lot of gold because they like the metal, for jewelry, for, traditional purposes, whatever it may be. People in the US buy gold from the vault and keep it there. People in the East buy gold, make jewelry and other stuff. So, there's less of that happening out of Asia at the moment, and I think that's what we're seeing. Both the fact that the fiat trade is down and the love trade is down. Gold is under pressure at the moment.
Well, AngloGold Ashanti says its renewable energy project at Tropicana is on track to halve gas consumption.
Yeah, look, we are in a situation right now where every company needs to be thinking about its, impact on the environment, on social, issues, etc. And it just makes sense to, basically have as efficient and as low polluting, kind of operations you can. Especially look at AngloGold Ashanti. They're moving their primary listing out of South Africa. ESG is much bigger outside South Africa than it is in South Africa. And, you've heard people like, the BlackRock CEO come on and say that, they're going to force boards to basically do these kind of things if they don't want to do them voluntarily. And BlackRock is a huge, manager of funds here. You're talking about, I think it's close to $10 trillion. And so if you want to be operating those environments, you need to be doing these kind of things, cutting your carbon footprint, making yourself more energy efficient, etc. And obviously it's good for the environment as well.
Okay. It is quite an uncertain time in the world. If you take a look at least at the energy availability or consistency we've seen so far in terms of some reprieve where Eskom is concerned, has that had an impact on the markets?
Look, it's a little confusing to see how that's going to come through, because primarily it's been looking at it from the point of view of the currency, which is reacting. The currency is stronger right now than it was like a month or so ago, or a few weeks ago at least, rather. But there's two factors there. One was the reason that really broke through that 19 and went through almost 20 was because of that statement by the U.S. ambassador about us helping Russia. I think that's kind of calmed down to a second. I think the market needs to see a bit more, stability in the energy price, in the energy capacity out there. We've had a couple of good weeks, level 3 only after 4 o'clock. But if you look historically, you see that around about this time, for whatever reason, the capacity rises. But the thing is that the trend is every year there's a small peak around this time of the year. But, the overall trend is that last year's peak is higher than this year's peak, and next year's peak is likely going to be lower than this year's peak. And so that's one of the fears the market has, and this is just a temporary reprieve.
Thank you very much to Viv Govender, portfolio manager at Rand Swiss.